Hey everybody, welcome back to the channel. Today I want to go over the Thursday, July 13th, the PM Silver Bullet session. All day we've been bullish, right? I'm still bullish. Take a high, come back here. I'm still looking to take out this high. So for right now, my narrative is I am looking for this high to be taken out. I'm looking for reasons to go long into a higher PD array, a higher time frame PD array. I'm not looking to go short. That's what I'm looking for. That's my bias, okay? Will I get it? I don't know. But we're going to go candle by candle. I'm going to buy and sell and see how it works, okay? So let's just start it off. So this dark gray is the 2 o'clock start of the 2 p.m. Silver Bullet hour. I don't know if that's been taken. Maybe that's relatively equal. But took that out right there. Took out some buy side right there. Well, let's see. We have fair value gap there. We have a fair value gap there as we're going up. So if it comes back in, I have another fair value gap right there. And another fair value gap right there. So leaving all these fair value gaps. See if it comes into any of these fair value gaps. Okay, so as it's coming down, I want to make sure we're buying in a discount. So if I put my fib from the low to this high here, equilibrium is right here. Ideally, like what I say, when there's multiple, you want to go to one of the furthest fair value gaps. So I would not be taking it right here. Ideally, if I put one here, I'd have to go below this candle, which puts me in the middle of these fair value gaps. So I need to have it below this low anyway. So I don't want to have that much of a stop. So for me, this one would be out, and this one would be out. I need it to come down into here. Well, when you look back also, that's also right in the perfect optimal trade entry zone area. I won't say zone. Area right in here. So I'm looking at entering on these two. These two I would not be entering in. We might not even get it. All right, there you go. That's good. I'm looking for it to hit this fair value gap. All right, they're at enter. So I'm going to buy 2 right there. So we're buying 2 right there. Obviously, I'm aiming for this right here is 5 handles, right? So this is the easy target right there. My stop is below the low here, which is all relatively equal, which again is suspect. So, you know, but you've got 2 fair value gaps right here blocking price. You got an order block right here. So that's good. So if it does break, that's the 3 PD arrays. Let me just highlight that order block. Let's see, order block. So I've got 3 PD arrays supporting price and the low. So actually technically 4 PD arrays. So I'm confident right here. Up here I would, it's just, I want to have low hanging fruit, which is taking out this high, and I'm right at 5. So that's perfect for me. It works out really well. Let's see how it plays out. For me, partials, I'd probably need partials to take it right about at the top of this fair value gap. So let me mark this off here. So for me, I'd want to take my partials right here. Oops. This is where I'd take partials. Okay. So let's see how it goes. All right, let's take that fib off here. The fair value gap right there. There's another fair value gap right there. All right, so could we get into this trade again? I don't know. If you have, let's pull a fib. Let's pull a fib from here, low to high. Let's see. Equilibrium is here, so it'd have to be in this fair value gap right here. To get in, and optimal trade entries here, this fair value gap. And if it does, I'll take another trade. Stop there. Oh, it doesn't. It stops way up there. See, so it would have came down. Well, and see, that one definitely would have taken me in. So if I take another one, I'm buying up all the way up here. And that's, you know, what is that? It's only, I'll buy 2 there. Technically I bought right here, but my other one was here, so that's why I moved it up there. So we'll see how that goes. Let's put another one in here, put a position in. Would have got in right there, aiming for 5. Let's see how this... I'd still take my partials there on one of them, so I'd take, let's do this, move this. My one partial is there. My next partials would be about right here or be here. Probably right here. All right, so I'll do another partials right here. Closes right here for my second order. So let's do partials taken here as well. Okay, so close above here, I'm taking one off. Close up here, I'm taking one off. So we're following this trade management here. Let's go with this. Okay. Of course, I need it to close above that. All right, so I can take one off there. And my stop for my first order, let me just move it, make it big enough here, is my trailing stop. And let's take off the fib so I get less lines here. So my first order, my break even's right here. Okay. And I took a partial here for that first order. All right. Oh, it hit it, but I need it to close there or about at or above it. Alright, so I can sell another one there. And my trailing stop for my first one and my second one now is 1 tick above the second one. So my first trade, I took 2 positions. I took one off here and moved my stop to one tick above break even. And then I took at the same time when they came back in here, down here, I got into another 2 positions. So I added to it. And when this one, the second trade, I got taken a partial, I moved my stop from the original to above this. So my first one, I'm in profit, and my second one, I'm 1 tick above break even. Okay. I still have 2 positions on for my targets. One would be above this, so I've taken it up when it closes above that, or at that, and then one above that. So just so you know where we're at. Okay, so that would have hit it right there. So I'm looking for something to close right at that. Alright, so taking that one off right here, which would have been this one right there. So now we're still at break even here. We need this one to close above that. I would have taken us out, so if it wouldn't have, my stop would be right here for this one, because that's the one I'm in. So let's see if we get one that closed above that. Alright, so we'll flatten right there. Should have taken it off right here. Close enough. But right there is how we would have managed our trade. So let's recap this one. You take these off and show you what your 2 silver bullet trade setups were. Let me remove my trailing stop. Okay, so our narrative was we were going long. We were looking for a higher time frame PD ray to get hit. So as price came up, it took out buy side, but it left a lot of fair value gaps and an order block. We pulled our fib from high to low to see where our equilibrium was, which was right in here. We know that if we take a trade, we need to be below the lowest fair value gap because we know price can trade in there before it goes to our target. So we waited for it to come down to optimal trade entry, which matched in line up evenly with one of our fair value gaps, so we got in. As price came back up and then started coming back down, it left a couple fair value gaps, and we entered additional entries into our position. Okay. When price came up here, we took our first partial and moved our first trade to break even plus 1 tick. And then when I took our partial for our second entry, our stop went up to break even plus 1 tick on the second entry. So our first order was in profit, our second was break even. And we've taken 2 partials now, we've been paid. So now it's a risk-free trade. We got out our first trade when it hit our TP, and our second we got out when it hit our TP as well.